Do you think Ethereum has finally bottomed? And what about the stock market? Have they finally bottomed after this big pullback? Look at this. Ethereum sitting on the cliff's edge. Literally sitting on a cliff's edge. Since the last bear market, right? This trend line, we've already broken this more credible trend line, the red one. You see the red one, right? And now it's about to retest this yellow trend line, sitting right on the edge here, about to close right on the edge. What's going to happen to Ethereum, right? This is the Ethereum selling pressure chart I was telling folks about. We're going to analyze those things in details in just a sec. Like, look at ETH. ETH, for example, whilst the market has been dumping like this, ETH had a lot of selling pressure. This is the buy sell pressure on ETH, right? When buy pressure is bigger and when sell pressure is bigger. And we clearly had a big spike here, and usually then it went straight up. So that was around the bottom. This was when around start of Feb. So on the ETH chart, let's get up start of Feb, ETH chart here. Start of Feb is basically here, Feb the 2nd, right? So then we bounced, from 1750 to this 2400 area, and now we're down again. So my call, previous to this, heading into this dump, when I saw Michael Saylor dumping, was I said, look, ETH is basically going to go to test this 1850 area, right? 1850, which is this red line here. It didn't hold. I said, look, we have one more support, which is around this 1600 area, 1650. I don't want to see us testing that. So remember, each of these last times, ETH came down here, was a wick down, and then quickly came back up onto the red line. Wick down to the yellow line and came back up to the red line. Here, wick down to the red line. So it would have been good if we just wick down to 1650, closed at 1850, and then bounce from here. But this time, obviously, it's much more scarier. So boom, we came down, and then that was last week. This weekly close, we're like 18 hours away, and I think it looks like we'll just hold on the edge here, on the edge of 1680. So ETH, similarly, if I believe that Bitcoin is going to a big bounce, then I believe certainly that ETH will also be heading into a big bounce as well. So this is a level to get in. And for folks asking about BitMiner, right, or SBIT, those treasury stocks, like I gave an update about 2 weeks ago because they've been included in the Russell 3000 and the Russell 2000 indexes. So some money are coming in to buy those two stocks automatically just because they're included in those indexes, because some ETFs track those indexes. But really, they're basically just a leverage move on Ethereum and on Bitcoin itself, because like Metaplanet, like MicroStrategy, they hold lots of Bitcoin. Like SBIT and BitMiner, they just hold a lot of ETH. So if ETH goes down, they go down more. If ETH goes down 50%, they go down 75%. If ETH bounces like 50%, then they probably bounce 100%, right? So where could the ETH bounce get up to? I think this is a compelling level for me, 2,400, right? Because one, we have these tops here. We have these bunch of tops here, right? And you could say, well, there were these bottoms, there were these bottoms, there were these bottoms. And also we're below the 200-week moving average. When we come up here, 2,024.50, we're also below that level. If ETH does manage to get above this level, which I think it can, then 2,900 area. 2,900 area. And obviously that's big resistance. We can see big resistance, big resistance, big resistance here. And that's where I think getting into SBIT and BitMiner around here, or doubling up on it, might be a good move. I can't be 100% saying this is the bottom and ETH can't just crash down and break down. But there's a good chance Bitcoin makes a bottoming tail from here and goes up, and it's a very good chance ETH does that as well. And the thing is this, have you noticed that everything is moving to stablecoins now? Because United States government is even encouraging stablecoins. And that is because US Treasury debt, bonds, Treasury bills has too much debt. And nobody outside the US essentially wants to buy those US Treasury debt. And so especially, the allies, the Europeans, not China, Now the Middle Eastern oil guys, they're not interested either because they used to get a lot of protection selling oil in US dollars from the US, and now whether you like it or not, the truth is they can't get that protection anymore. So if they can't get that protection, they might have to sell oil in the yuan or even in the euro, whatever currency. Then where do they even get the US dollars to buy those US Treasury bonds? So what the US government is doing is to attract people to buy US Treasury bills through the stable coins. So the way it gets, this is the trick, and this is why it's good for Ethereum. Right? The trick they're playing to make sure that stablecoins will do well is by they stop issuing the long end, the 20, 30-year US Treasury bonds. They stop issuing the long ones because no one wants to buy those long 20, 30-year-old bonds because in 20, 30 years, they don't know if the US can ever pay it back. They do trust the US government to pay it back on the short end, which is like 2 weeks from now, 3 weeks from now, 3 months from now. Those short ones are called treasury bills, right? So they say, well, I don't trust the US government can repay its debt 10, 20, 30 years from now, but I do trust it can repay its debt 2 weeks from now, 3 weeks from now, 10 weeks from now. So US government, rather than issuing the long end, they issue the short end, which is the treasury bills. And those bills are what's used to back the stable coins. Every time you basically go to Tether, you buy some USDT, or you go to Circle, you buy some USDC, legally they're required to take that money, every $1 you give them, they're required to back that up by using that $1 to buy a US Treasury bill. When they buy a US Treasury bill, then legally it's supposed to say, well, then when you want your $1 back, Tether would sell that USDT, and that $1 would then be returned to you. They keep the interest. They keep the 3%, 4% interest, whatever it is, but you get your $1 back. That's how Tether and stablecoins are supposed to operate. They've made laws about this. I think that was included in the Genius Act. So therefore, that's how US government is getting around the debt situation. But how does that help Ethereum? Well, so you can see that US government is encouraging everybody to get onto the stablecoins. It's a roundabout way of saving the US Treasury bills market because the bond market, the long end, is already kind of in collapse. So, but at least it's bad because you can't borrow money from people 20, 30 years out. You can only borrow money from people 2, 3, 5 weeks or a month out. So therefore, you have to keep on rolling that debt, massive trillions of dollars in debt every few months, every few weeks. So that's bad. But for Ethereum, that's good because all of that stable coins, when you think about it, 90% of stable coins, or something like 80% of stable coins are on Ethereum chain. Like, yeah, there are some that are on Tron, TRX chain, and they're popular in Asia. But the bulk of Wall Street banks, when they come in and they issue their stable coins, when they issue their coins called USD1 or JP Morgan dollar or BlackRock dollar, whatever, it's going to be on the Ethereum chain, right? So I don't understand why the market is so negative on Ethereum. But I guess the argument against Ethereum is that, yes, stablecoin is going to do well. That means Tether is going to do well and Oracle is going to do well. But the base layer, Ethereum, may not do that well because it's similar to like when they invented electricity, like everything from laptops to computers to EVs to everything needs electricity. But the electricity companies, they're just utility companies. The power companies, they don't do well. You can't even probably name a utility company, right? But it's the things that use electricity does well.